Good morning to everybody. The FutureTrend channel is again with you, and today, 24th of April 2018, we start our analysis of major currencies. Of course, the number one rhetoric discussing now in the foreign exchange market, the number one topic, the number one theme is the strength of the United States currency. The strength which is mostly associated with current strength of yield of United States government papers. As you know, the 10-year yield curve yesterday tried to succeed the 3% threshold. Of course, we should understand if this kind of threshold will give way. That will mean just one thing, that the United States dollar could accelerate, the current strength could accelerate its recent gains and go much higher from local levels. That's from one point of view. But from the point of view of credit risk, the situation is not so simple. We should understand that the current upsurge of United States of the yield of United States government papers is a result of two important factors. Of course, the first one is a positive one because of very solid economic numbers coming from the United States, taking into account the current rhetoric of United States central bankers, which are very confident that they should increase the interest rates in the country some more, and that means that probably during the course of 2018 we could see not just 3 rate increases, but probably 4 hikes. That's one point of view. Another point of view of rising yield curve of United States government papers is rising supply of such kind of papers and also reducing demand. We should understand that in case of statistics, if we take the statistics of nowadays, for example, the Bank of China and the Central Bank of Russian Federation now are in a position to reduce the holdings of United States government debt. That means that altogether, with rising supply to stimulate the economy, to infrastructure the economy, which already the United States started to do because of United States restructuring plan and also tax cut plans, which was conducted by the United States President administration. All in all, the situation here is not so simple. So we should not underestimate the problem of United States credit risk, because it's a longer-term problem, and if the market starts to concentrate on such kind of problem, please believe me, the United States dollar will suddenly reverse its kind of course to the downside, and reverse very quickly. But now, from a short-term point of view, the United States dollar should remain very stable, very solid, and very strong. So, as regarding the situation by one major currency to another one, as you can see, the euro dollar, we increased our position at 121.90, bringing it to an average price of 122.40, and now we still target the short-term downtrend line, which located at the moment around 124.20. While below this trend line, probably the euro dollar should remain under the pressure, and the pressure on rather important downside barrier of existing trading band between 121.50 and 125.50 should remain under the pressure, I mean at the lower threshold. Just only in case of a direct break below this line, this support of 121.50, and also below another important line, the highs of 2017 around 120.92, also we look on the daily chart, we have a very important moving average 200 daily line, which intersects today around 120 line, altogether with psychologically important level of 120. That kind of level should represent a very tough point to break for the euro dollar at the moment. So all in all, we still keep our long trade recommendation and suggest that from a longer term perspective, the euro dollar will sooner or later reverse back to the upside. As regarding the situation with other currencies, for example with dollar yen, which is 108.82 now, as we told yesterday, break above critically important resistance barrier 107.90 should be resulted in higher levels for the dollar yen, which we already seen today in the morning. Of course, there were a lot of stops above 108 first of all, but not dramatize the situation, because from a longer term point of view, the dollar yen should at least remains rather stable. First of all, because we're still trading below moving average 200 daily line at 110.28. Also, don't forget about the longer term downtrend line, which located around 112.60 today. All in all, we suggest that the pair should be supported at the moment from a short-term point of view. But anyway, the longer term perspectives should remain rather stable, and that will mean that probably we even sooner or later resumes the underlying bearish mode in the currency. At the moment, anyway, we prefer to stand aside and will sell the currency, this kind of paper, this kind of pair, only on a possible testing of moving average 200 daily line. As regarding the cable is at 139.40 at the moment. Already here, from a technical point of view, we suggest that all the short-term technical indicators are slightly oversold at the moment. That means that probably sooner or later the correction in the cable will start. That's why we decided to buy back a portion of our long position in the cable, because from a longer term point of view, also here the cable is looking rather supported at the moment, because we're still trading above moving average 200 daily line, which located at 135.10, with important line around the lows of 2018 around 137.11, and also because, as you can see, 136.57, the highest of September 2017, also is another important support line to the downside for this for this type of currency. That's why we still suggest from a longer term position the cable should remain supported, but kind of recent losses should be treated to a current strength of the United States dollar, which sooner or later should be stopped. As regards the dollar Swiss, we already sold a small position at 97.80 here, because we, as we suggest, the short-term indicators are highly overbought in the currency, that sooner or later should provoke a correction to a short-term uptrend line located around 96.20 at least. Also, we are closer and closer to a longer-term downtrend line located around 98.70 today. That's why we suggest that it's time to sell the dollar Swiss here, have a position and another have at 0.9840, because only a break above 0.9870 should really change the situation from a longer term perspective for the dollar Swiss back to the upside. At the moment, that's all. It was your Future Trend channel, and some later we will come with our strategy regarding euro crosses and commodity currencies.